SAP FICO. FI, if we talk about FI, what do we have in financial accounting? There are multitude of layers like GL, account level data, okay, like um telephone expenses, admin cost, cafeteria charges, and so on. Okay, so FI is for external and internal reporting. Okay, whereas CO, it has a much larger, deeper scope for cost accounting. Okay, um, manufacturing, manufa uh, manufacturing accounting. Okay, and for to find um, manufacturing cost. Okay, so this is GL account level, but the usage, how this is going to be used, okay, that will be like telephone wise expenses, okay, that will be used for um, department wise manufacturing cost um, for admin and cafeteria, because this is also considered in costing. So this is just an example I'm giving you right now, but CO is more about profit center accounting, um, cost center accounting, cost element. Now, in FI it is GL, in CO it is cost element accounting. Now, cost element is also used for distribution of costs to various cost centers, which also includes production cost centers as well. And then we have integration with production planning, FI, SD, very deeply. Okay, speaking of profit center accounting, and SD. In SD, we have sales areas, sales org, um, distribution channels, divisions. In we have plant, location, storage location, material types. In CO, we have overheads, which includes labor, machine overheads. Some will be direct, some will be indirect. Okay. So speaking of SD versus profit center accounting, sales area comprises of what? Sales office, distribution channel, and division, and sales org. Now, how does it relate with profit center accounting? Now, sales area can be charge or, okay, yeah, division, let's say aluminum, or since we are going to use automotive example, so we will have SUV as a division and passenger vehicle as a division. Distribution channel. Now, this can be like we have a distribution network in Sharjah, in Dubai, in Fujairah, Ras Al Khaimah, and so on. Okay. Okay, this can be distribution channel. So you have a sales area which you can define. And sales org. Now, sales org can be centralized, or you can have a separate for SUV and passenger vehicle. Okay. So in profit center accounting, what you have to decide is whether your sales office will be a profit center or a distribution channel will be profit center, or the whole sales area will be profit center, or division will be profit center. So division actually can be profit center as well, but that is up to your customers business decision to include this. Okay, so that's why we have to make GLs in FI, in SAP. We have to make profit centers, cost elements through CO in SAP. And we have to have these enterprise units like sales area, sales org in SAP. Plus, we will have plant location, storage location, material types, and overheads. That will see how we create these in detail. Okay. And then we will create integration with sales and distribution units, business units. Now, these are business units that we are talking about. Okay. So this was just an overview. So if you come back here, this is our front end. Okay. And if you speak of controlling, we have cost element accounting, cost center accounting. We have profit center accounting as well. For example, if you talk about standard hierarchy, okay, over here, if you look at it, we have profit center as plant as well, plant 1 and 2. We can also have plants as profit centers, and we can have, and this is plant is related to material management, but we can also have sales and distribution units, enterprise units as profit centers, because those units are responsible for making sales. Okay. So we talk about cost centers. Standard hierarchy, display. So we have a standard hierarchy for profit center, and then we have hierarchy for uh, cost centers as well. Okay. For example, if I double click on 102, 102 is active and it is reporting to P01, 101 for plant 1 and 2. So assembly, body shop, paint shop will also be connected with profit center. Okay. So that again reaffirms that profit centers govern cost centers. Okay. And cost centers distribute various costs from FI based cost centers. Like I said earlier, that we will be capturing charges and expenses and distributing to cost centers that are reporting to profit centers. Okay. For example, we have a cost collector over here, which shouldn't have any profit center. This is a cost collector. If I go to organization, it has no profit center. Okay. And if we have common cost center for 101, 102, 103, that is 2000, that also will not have any profit center. And it is a common cost collector for these production cost centers. Now, production cost centers again is 101, 102, 103, paint shop, assembly, and body shop. Okay, this is for automotive. So now that we have a little bit of understanding, let's get down to configuration, which is T code is SPRO. Okay, enter. Reference IMG. Now this is our back end where we start configuration of our enterprise. Enterprise is our customer, client, company. Okay. And we have to define units, enterprise units like company code, segment, profit center. These are high level units. In controlling, we have controlling area. It has its own settings. In logistics, we have plant, location, division. In sales, we have sales org, distribution channel, sales office, sales group. Material management, location, storage location, purchase organization. Logistics, warehouse number, shipping point, loading point, and so on. So these are your units, operational units of your company, of your customer. Okay. So our first step is we create a company code. How do we create that? We copy, delete, check. Copy organizational object. Since LAP9 is our template that we have made over here, here we'll make our company, which is an automotive company. Okay. And let's call it GAP 9. GAP is our automotive company. It will ask us, do you want to copy GL account? No, I will make my own. Do you want to copy the assignment controlling? No. Do you want to allocate different local currency? Yes, that will be AED. Continue. Continue. Transport number ranges, all it does is just transports and copies some number ranges that will help us reduce some of our legwork. Okay. Because some default configuration, which of course SAP has to do at the table level, that is reduced. That's why we copy a organizational object, nothing more than that, because we are starting from scratch. We're starting FICO configuration from scratch. So this is basically a baseline preparation for configuration. And right now we are making a company code. Over here, now this is where we store our configuration. So we will make our own gap 9 FICO config. Gap 9, double click. Copy. Just say yes, yes, yes to every other object. This is again transporting intervals. Number intervals, we'll see what are number intervals. Okay. So company code copied to gap 9. Now, next step is pretty easy. /n means new session, SPRO configuration. Okay. Enterprise structure, definition, financial accounting, segment. Now, what is a segment? Before I go into segment, let me tell you. Our mother company is Gap. Okay. Company code is Gap 9. Okay. But between company and company code, there is a lot that is going to happen. CO, that is controlling area. Controlling area has profit centers and segments, profit centers, cost centers, cost elements. But company code functions and operates under a controlling area. So the relationship with company code is 1:many, which means one controlling area can have multiple company codes, but for that, for 1:many to integrate with one controlling area, we need two conditions to be met first, and that is fiscal year variant. What is fiscal year variant? January, December, or July to June, or April to March. Now this is a fiscal year variant. If there are multiple companies, those companies will have to follow any one of these, or any, I mean, it could be anything from September to August, whatever. But if once a controlling area is set with a fiscal year variant, for example, working with April to March, all the companies will follow this fiscal year variant. It cannot move away from that. Second, this chart of accounts will be the same. If there are 100 companies that will use the same chart of accounts, which is being used and dictated by a controlling area. Okay, got it? So So controlling area has more precedence and weightage over a company code. Okay. Company, this is mother company. Over here, we have operating concern. Operating concern is another name for mother company, and it does nothing but it gets the reporting at the top level, which is also called COPA, which is controlling and profitability analysis, COPA, which is not difficult. Okay. Now, once this is done in company code, after what units report to company code? Plant, sales org, purchase org, and what else? These units report to company code. Multiple plants can be assigned and integrated with one company code, and same is the case with sales org and purchase org. But purchase org also reports to the plant. It also gets integrated with plant as well. I hope you get the hierarchy, the family that we define. Okay. Now segments, as I said, now segments are superseding profit centers. Okay. Profit centers have segments, okay, to report to. So segments, what are segments? Oh, in our case, in the first example, we said that your sales areas or sales offices or distribution channels can be your profit centers. So in segments, we will make two segments. SUV, gap 9. Passenger vehicles, gap 9. Save, save. Okay. Now we have two segments. Gap. Now in profit centers, what we'll have, for example, let's say distribution channel, which is Sharjah, Dubai, Fujairah. Okay. Now these profit centers will either be integrated with SUV or with passenger vehicle, or it can be anything. I mean, it is not necessary that locations will be assigned to segments like that. That is again purely up to the business decision of the customer. All right. I'm just giving an example. So just to show you that segments have a higher precedence than profit centers. Okay. That is done. Next. Next is pretty simple. Financial accounting, global setting, fields, field status variance. Now, what is field status variance? I will explain this later, but right now, let us just define one. 01, copy as, because this is a template, 0001, I will say gap 9. Gap 9. Copy all, continue, gap 9, select, groups. We have some controls for fields of the GL accounts. For example, in cost accounts, if I go into it, I have some heads, groups, okay, which are highlighted in blue, which means that these are active. I will go to additional account sign by double clicking it. Over here, I have cost center as optional, required, or suppress. I have the option to set these fields which will be displayed with the GL account these groups are associated with. Okay. So what I'll do, G04, copy as G002. It doesn't matter. Nothing to worry about if you don't understand this. Cost accounts. Even if, because we are going to look into this in pretty much detail in the next lectures. Okay. So I will double click. Additional account assignment. Cost center is mandatory, which is required entry. Save. Save. Okay. I hope you're clear till here. I'm going very slow. Next step is assign company code to field status variant. Position. Gap 9. Company code. And gap 9. Save. Okay, I'll stop here today so that you can practice it, because this is, of course, a little bit heavy for the first lecture.